Hey, what's up, guys? Welcome back to the 9 to 5 Fugitive. Today, I am going to show you what I'm considering in terms of placing an options trade, opening a position on an options contract on Coinbase. And I will show you why. So right now, what you're seeing on my screen is a day chart for Coinbase, and you can see today has printed a nice green candle. If you look here on my right, that represents a change in 7% to the upside, and $12 plus in dollar value. So on green days, what you get are higher premiums on call options, right? And on red days, you get higher premiums on put options. So part of my strategy is always to sell options, whether that be calls or puts. And I target selling calls on green days and target selling puts on red days because of the higher premiums. So with this, and I use these indicators as part of my options trading strategy. These three lines right here, they're called the Bollinger Bands. This red one is the upper band. This blue one is the middle band, which is actually the 20-day SMA or simple moving average. And then the green one here is the lower band. And how I use these to help me make my decide which options contract to play in, or to play with, or to open a trade on is when there's a nice green day, and the closer it gets to the upper band, the closer I get to opening a position, because chances are in my favor that it won't go too much higher, especially if the width of the bands is already decently wide. If they're narrow, or if they're squeezed, then there's a higher chance that they're going to expand again, right? Because you can see like the history of the bands kind of goes like this, like an accordion, right? In and out, in and out. And if you look at different stocks, you'll see the same thing. Maybe Tesla. I have it on Tesla. I've been looking at Tesla for a bit, but check it out. Kind of squeezed here, then expanding, then squeezed, then expanding, really squeezed here, then really expanded here. So you can see what I'm talking about. So back on coin, I guess it's kind of getting into that squeezed territory. So there is a chance it could expand. So keep that in mind. But just to give you an idea, I'll give you a sense of what I look at. The closer it gets to this orange band, I haven't opened a trade yet, but I may on Monday, if it gets higher and the premiums are higher, then I may just open. Sell to open, sell call options, and they're covered calls. They would be covered calls. That's part of the how I trade options. And so I would probably wait right around here, right? Looking at this right now, Monday could show me something else, and it could turn into a different story. But here I would, I'd be looking at this to sell covered calls here at a strike price right around in here, and probably 2 or 3 weeks out, and then make money on the premiums, and then watch that price action over the weeks leading up to the expiration date. And then hopefully with theta working in my favor and decaying the premiums in my favor at a faster rate, because it's all within 30 days, then we'll be able to buy it back, buy to close, right, and make a profit just on the premium. So, and if you don't know what I'm talking about, that's okay. Continue to watch this channel. You will, you'll see me posting more of these videos on trading options and trading futures. If you want to move a little bit faster in learning about this stuff, there is a way. You can check the Linktree link in my YouTube channel description and the description of this video. And the first link is to subscribe to the 9 to 5 Fugitive newsletter. And once you do that, then you'll get an invite to the Discord trading group. And I plan to be in there daily as much as I can. Trading, sharing my screens, trading live, executing trades live. And I hope, my hope is that we could have live conversation and discuss strategy and learn from each other and grow together and achieve financial freedom together, right? Different modes of income, which leads me to the other links in my link tree if you're interested in side gigs and starting businesses. Check out the other links in the video in the link tree, and you'll see what I mean. And I'll just say one more thing about options here. I use Fidelity to I use Fidelity, and I also use Interactive Brokers. Fidelity I'm using a lot more lately, just more because of the positions I have there. So here's where I use Fidelity for my Coinbase bag. And so here's a look at, we're looking at Tesla here. Let's switch this to Coin. And just to reiterate what I was talking about earlier, today's the 11th. Okay, so we had, contracts expiring today on Friday 11th. Then I would look to sell I would sell the open covered call. So calls here are on the right. Sorry, puts are on the right. Calls are on the left. And look at those prices. Like, look at those premiums here. These green numbers. That's the change in premium for these call contracts, and that you would get by selling the call contract. So, yeah, I would probably, let's go back to Coin. I mean, it looks like this orange band is 183, right? 183. So if I go here and I look at a 7-day expiration date, which would be the 18th, I probably wouldn't do it that soon. Sometimes I do, just depends, but I'd probably do on the 14-day expiration or 21-day down here. Also keeping in mind any dates of significance. So October 30th is an earnings date. So keeping that in mind, prices tend to rise approaching earnings, and then they tend to fall right afterwards. So that's something to keep in mind as well. So we could do a expiration date right after the 30th and take advantage of that fall in price, right? But it's always, that's not guaranteed, of course. So, maybe I'm leaning towards that, right? If the price keeps going up on Monday, and we're looking at a 183 upper Bollinger Band right now. So let's say, I don't know, 185. No, I also look for decent open interest. And I also look for selling covered calls. I look for a delta 0.50 or at 0.50 or less. So just kind of the way I do things, managing risk. So, but 0.50 or less would put us here, right? As of now. So a 180 strike price, selling one covered call contract would be about $1,100 that we put in our pocket by selling the contract right now. I think that's pretty nice. That was a gain of $465 on the premium price today, just in the price action for today. So that is juicy, in my opinion. If things keep going that way Monday, I may do that. I may pull the trigger. So, and that's kind of right, meeting my criteria as far as what I look for in Delta. Open interest is not great though. But I like it. It's the date right after earnings. I think this is a pretty safe call. Yeah. Pun intended. So, yeah, that's it for today. That's kind of me evaluating, opening an options trade on Coinbase, and to kind of give you a look at how I evaluate my positions or taking a position. If you like this kind of thing, again, check out the link in my video for the link tree for subscribe to the newsletter and joining the Discord trading group and all those other goodies in my link tree around side gigs and business opportunities. And so thanks for watching, and have a blessed day and a blessed weekend, and I'll see you in the next one. Peace.